Greetings, members one and all of the Salivation Nation. Can silver prices top gold's performance in 2020? That is kind of the question, because it could be a pretty volatile year. You know, as of the recording of this video, the president has not been impeached, but he will before midnight for sure. And that is going to probably set off the beginning of a very hotly contested political season as we go into election year, and that other things relating to dust settle on Brexit, the global trade war, negative bond yields, recession threats, a lot of different things that will be coming down the pike here in the coming year. So it could be quite a volatile year for many different things. So let's take a look at this analyst here and what is written here from Kitco about what the outlook is going to be for silver and gold into next year. So silver is looking to play catch-up to gold and potentially outperform the yellow metal next year, according to analysts who are eyeing the U.S.-China trade progress and silver's improving demand as key drivers. Both silver and gold had a stellar year despite dropping off its 2019 highs reached this fall. During the last 12 months, spot gold rose around 19%, and silver advanced 16.9% according to Kitco's aggregated charts. So really, gold has performed better than silver, but silver is more volatile than gold, and there's other factors that are coming into play, and we'll discuss those here. Spot silver prices reached their 2019 peak at the beginning of September, trading above $19.60. Wow, a lot of us were excited seeing potentially that silver could go to $20 per ounce. At the time of the writing, spot silver was at $16.99 and March COMEX silver was at $17.07 an ounce. The biggest drivers for silver next year will be the U.S.-China trade situation and global growth prospects. And I will say that with regards to the U.S.-China trade relation, once we see a signed Phase 1 deal, there is talk that they are going to begin work immediately on Phase 2 and potentially have that wrapped up before the election's over. Whereas just a few weeks ago, Donald Trump was saying that there may not be any movement on even Phase 1 of the trade deal until after the election. Of course, I think a lot of that was kind of posturing to kind of bait in the Chinese to try to come to some sort of agreement sooner rather than later. The biggest drivers for silver next year will be that, and the global growth prospects probably includes Indian demand of silver. I posted a video earlier about that, and if there is an increased demand for silver in India, that could have an effect on prices for sure, especially if the economy continues to do well. That is a situation where you have increased demand in China and silver's increased demand for use as an industry in the biomedical field. That could be one way where a good economic situation could mean higher prices for silver just based off of that factor alone. Here's a little interactive chart showing the weekly precious metal prices for gold, palladium, and platinum. Gold prices are from the Fred's London Bullion Market Association gold price, and PGM prices are from Johnson Matthey. So you can see here how things have changed over time. Very interesting. Everything kind of moves around depending on where you're at. I guess where you're at on the chart is where everything reaches parity and the difference between them as you go through time. So let's see here. Palladium is biggest move upwards. Crazy how high palladium is now. For silver, trade negotiations are one of the key risks, given the impact it has on industrial demand growth, economic growth, and an outlook for each of the sectors, Cooper said. What do we expect the Federal Reserve to remain on hold for 2020? But there will likely be continued concerns around the U.S.-China trade negotiations. Given that there is still negative yielding debt on a global basis, this is likely to create a positive backdrop for safe haven assets. The outcome of Brexit will also play a key role, especially from the perspective of its impact on European growth, Cooper pointed out. And as you know, Boris Johnson won a decisive victory as well as a Conservative parliament. So more than likely we will see Brexit come to its conclusion. Now the fallout from that will be a different matter. We'll have to see how things play out in terms of trade. But already President Donald Trump has tweeted that about the potential for a pretty great trade deal between the United Kingdom and the United States. For gold and silver, it is going to be the macro environment that is the key driver, Cooper said. We think the trade tensions will be the underlying theme for the complex as a whole. I agree with that. It seems like that's what's been really moving the prices, are the biggest driver of price movements lately. Whether it's going to impact industrial demand or auto sector growth, or whether that triggers safe haven interest in gold and silver. And safe haven interest is essentially a term or a phrase that would be utilized for increased demand in coins, rounds, and bars, the physical silver, or ETFs, electronic silver, but basically silver and gold that doesn't do anything but sit there. So one of the popular calls for silver next year is for prices to trade around $18 an ounce. That's not unrealistic in my mind. With most gains set for year end, silver could close out next year around $17.50 an ounce. RJO Futures senior market strategist Philip Strybel says, I think that it's going to go even higher than that. I believe potentially could go to $20 next year. The Dutch bank ABN AMRO projects silver to reach $18 an ounce by year end after averaging $16.60 throughout 2020. So they think it's going to be bearish. We think that an aggressive sell-off in silver prices in the coming months will be an opportunity to position for higher prices later in 2020. ABN AMRO senior FX and precious metal strategist Georgette Boll said, silver prices will probably be more supported if global growth and global trade start to stabilize and improve somewhat. Strategists at TD Securities see silver's potential peaking at around $20 an ounce next year. I'm more in line in that thinking. Silver could jump to $20 by the end of 2020 in response to its firming fundamentals and spillover investment demand from the yellow metal. I think that's right. I think it's probably going to happen closer to the end of next year when we see that $20, barring any black swan event of some sort. A lot of the drags on growth, such as print episodes of deleveraging in China, tightening in the U.S., all been flashed out. Going forward, we should see some improvement, TD Security strategist Daniel Gali added. Standard Chartered is projecting for silver to averaging at $17.50 in 2020 and reaching a peak of $18 in the second quarter. Metals Focus says that it sees silver averaging around $19.40 in 2020 with the potential to touch a high of over $22. Okay, so there are still, a lot of these are pretty safe bets. They're safe calls from everybody. With the Standard Chartered saying that it's going to average out about 50 cents higher than where it is now next year, but it could possibly reach $22. Silver could be looking at a fairly wide range next year with support at $13 an ounce and resistance at just below $21, according to Kitco's very own senior technical analyst, Jim Wyckoff. And I think that's certainly a very comfortable call, I believe, for sure. The monthly continuation chart for nearby COMEX silver futures reveals prices are in the middle of a wide trading range. Well, silver is more volatile for sure. Bound by longer-term chart resistance at the 2016 high of $20.83 and by the 2015 low of $13.66, Wyckoff said. So that's where he's basing his range there, which makes sense. Silver's technical picture going forward looks neutral, neither favoring the bulls or the bears, added Wyckoff. The monthly chart suggests that in 2020, silver prices will continue to trade in choppy fashion within range defined by the support and resistance lines seen on the chart. So there you go. And if that's the case, then I don't really see how it could outperform gold based off what we've read so far. But it goes on to say here, continues on saying that one of the significant concerns with silver this year has been its underperformance in comparison to gold, especially when prices hit multi-year highs in August and September. Whereas the gold price was trading at a 6.5-year high in September and was only 20% short of its all-time high, the silver price achieved a 3-year high of just under $20 at the same time. This still left silver 30% below its spring 2013 level, however, not to mention a long way off from the all-time high of around $50 that it had reached in 2011, Commerce Bank said in its outlook. Excellent analysis, I agree. As we count down to the new year, many analysts are now more optimistic on silver in comparison to gold. Silver could outperform gold next year, said TD Securities commodity strategist Daniel Gali, noting that the gold-to-silver ratio could improve in favor of silver. Over the last few years, investment for silver and gold disconnected quite a bit. Over the last few months, however, there have been signs that correlation of investment activity for both metals has turned positive again, Gali told Kidco News. We are optimistic on the prospect for gold, but we think it will pay off more for those who are to purchase silver. We think the industrial demand side of the equation will improve later in the year. RJO Futures Tribal is also more optimistic on silver due to its demand component. The ratio between gold and silver will continue to crack lower, favoring silver and taking away from gold. Silver will take from some of the other metals like platinum and palladium, and the trade deal will help boost the technology demand for silver. And that's basically kind of what I'm thinking as well, too. I believe that if the economy continues to do well and these signs of recession start to go away or not scare people as much, and especially with the trade deals, phase one trade deal being settled, USMCA being passed and implemented, then I think potentially we could see greater demand for silver, which could cause the prices to go up. If there's any black swan events that occur that makes the markets nervous, well, we could see silver go up there too and close that gap between gold and silver, the ratio there. Be very interesting to see how it plays out. The other hand, Standard Chartered's Cooper said silver might fail to outperform gold next year, noting a lack of tactical positioning of the metal. Until we see firming and underlying supply and demand dynamics and investor interest, it's likely we are going to see silver playing catch up with gold, but perhaps not outperforming it just yet. And this basically reinforces what I had said in prior videos, that we really won't see that ratio tighten until we see more investor interest, or I don't like to use the word investor, but those of us who accumulate the precious metal to hedge ourselves against economic instability as a form of insurance. The demand for coins, rounds, and bars, especially in the physical side, that is really what's going to move the prices up. That can happen in conjunction with these other factors. You take an interest in silver. Why? Because the price is going up because of increased demand in places like India, and industrial demand because of economic stimulus. Risks to silver's outlook next year include industrial demand and potential liquidation of ETF holdings, Cooper added. So we expect silver to remain elevated, but we do not see a sharp move higher. For silver prices to move sharply higher, we would need to see solid growth in terms of industrial demand as well as continued interest on the investor side. In terms of the upside, there's still room for investors to position in silver. The biggest upside risk are for the Fed to start cutting rates in 2021. Keep in mind that most analysts don't think that the Federal Reserve are going to touch any interest rates at all, one way or the other, next year in 2020. A very rare silver buy call came from CPM Group ahead of the new year. The group issued an intermediate term silver buy recommendation for investors in December, stating that the silver market is at a critical vertex at present. Interesting. Silver prices are more likely to rise them fall in the next few years. But uber bulls might still be disappointed, explained CPM. Silver market fundamentals are precariously similar to critically poor conditions that existed in 1989. Our expectations that the market may avoid the long period of net investor silver selling and low prices that followed from that year. CPM defined its intermediate timeline as between 2 and 3 years. The last time CPM issued a recommendation on silver was back in May 2021 when prices reached $48.19 and CPM advised to sell. CPM has waited until now for a variety of reasons known to our clients. For one, the market was not supported strongly higher prices over the past few years. As a result, prices have not moved sharply off their 2015 and 16 lows. So there you have it. A myriad of different analytical points here, but I think most people feel that the silver is going to climb up slowly and steadily over the next year, unexcitedly. However, I believe there is a potential for sure for silver to outperform gold, considering its use as a commodity. And so when economic conditions are favorable for demand to increase in silver, that's going to spark interest from folks like you and me to want to buy more silver. That is going to piggyback on the other, and that could cause the prices to go up while gold remains relatively stagnant, therefore closing the gold to silver ratio. I could very much see that happening in the coming year. Post your thoughts below. And again, just a reminder that I post videos daily and would like to extend a multitude of gratitude to you all for watching and encourage you to please rate, share, comment, and subscribe.